Hi everybody, Drew Stegman here, and today we're talking about penny stocks and how you can make potentially, the key word is potentially, thousands of percent returns buying penny stocks. And I mean, how cool would that be if you were able to invest like $1,000 and turn it into $10,000, $20,000? I think anybody would take you up on that offer, or I'm sure you would, take up that offer is what I'm trying to say, if that was offered to you without any risk at all. The unfortunate thing is that penny stocks are very risky. So you might be up 1,000% in your account, or you could be down 50, 75%. And this can happen over a very short period of time if you're not careful. So you have to be willing to lose the money. That's the first thing. You always have to be willing to, put money on the line and say, look, I'm willing to lose all of this, but with the potential of turning it maybe into $100,000. For example, I decided in November to actually put $4,000 into my TD Ameritrade account. And as you can see right now, the balance is $34,000. This has been made just over the last few months, trading penny stocks, buying penny stocks. I still hold some positions that I've held a couple months ago. They've gone up a lot. I have taken some profits along the way. So I'm just kind of giving you my experience, and this is what I really look for, this checklist right here. And I'm not showing that to brag. Oh, look, I turned $4,000 into this amount or whatever. But you can make huge returns. So I mean, if anybody tells you that you can't make big returns trading penny stocks, they really don't know what they're talking about, because the returns can be astronomical, and you can actually grow a small account with penny stocks extremely fast. I mean, if you're going to invest in like large cap blue chip stocks, you're not going to grow $1,000 into 100,000, maybe not even over the course of 10 years, probably not. I mean, if you don't put any additional money into that account, $1,000 probably won't even be worth $100,000 in 10 or 20 years time, depending on which stocks you're buying. But I mean, if you're buying penny stocks, you have the potential to turn that $1,000 into 100,000. I'll give you an example of a penny stock that went up substantially in recent months, Alpine 4 Technologies. I owned that stock, and I actually sold too early. So I was buying it in the 4 to 5 cent range, and I sold some at around 50 cents, and I also sold some shares above $1. So that stock recently went above $8 per share. So you're talking about a 20,000% increase in the share price. So, anybody who says that you're not going to make money trading penny stocks, you might as well go to the casino. You can make some really good profits, but this is the checklist I go through when I'm looking for penny stocks to buy. And I have to really see that these factors are in play. And I'm going to talk about maybe some exceptions to the rule here. But the first thing is to understand the business. I mean, this is so important. You have to understand what you're buying, and you have to understand, what the company does. I mean, just like any other investment. So I really try to take this super seriously, this checklist. The first one, I mean, that's just like any type of stock market investment. You want to do as much research as you can on the company. You want to try to find out as much as you can about the business fundamentals. What does that business do? What does that business sell? Or do they even sell anything? A lot of penny stocks don't even sell anything because they're total scams. And that's the unfortunate reality when you're trading penny stocks, on the pink sheets, the over-the-counter markets. These are unregulated exchanges for the most part, so they don't have the same stringent requirements as like the NASDAQ, the New York Stock Exchange. And so these types of, these exchanges, the bigger exchanges, have much more stringent requirements than like the pink sheets or the over-the-counter markets. And that's really what I'm talking about here for the most part when I'm talking about penny stocks. Penny stocks are under $5 per share though. That's the proper definition. So it could be anything under $5 per share. They could be on the NASDAQ, they could be on the New York Stock Exchange. And there's a lot of good businesses under $5 a share if you know where to look. But that's why you always have to understand the business. And I mean, there's some penny stocks, like Alpine 4 Technologies, for example, they have a great, business. They're growing revenues. That's my next point on the list. They're not making a profit, but the point here is that, Alpine 4 Technologies was growing revenues like, I think one year it was like 80, 90% revenue growth year over year, which was astronomical. I mean, you look back at their prior financials, they were doing, I think, like $5 million, or not even like $5 million in revenue a year. And then they exploded into like $40 million revenue growth. They acquired Impossible Aerospace. That was the big news that really set off the run in Alpine 4 Technologies. But that's just one example. And so you look at some of these, businesses that are trading over the counter, and there are some, really good opportunities if you know where to look. And that's why I'm just kind of using that as an example. So you want to understand the business. What is the what's the product they sell? What is the competition around those products that the business is selling? Like I said, are they even selling a product? Do they even have revenues? And then after you look at these two, you want to look at, are they making a profit? Now, Alpine 4 Technologies was not making a profit. And as of the last quarter that came out, Q3, they still had not made a profit, but their revenue growth was growing exponentially. So will they make a profit in the future? I think it's very likely if they keep on growing the business the way they do. So the most important thing, like I said, these two, you don't necessarily have to have net profitability, but you do have to have revenue growth. You have to really understand what you're investing in. Understand the management team. Is the management team experienced? What do they have going for them? What's their track record? Just all those different things that you would look at with any kind of company. And like I said, this is money that you have to be willing to lose, but I still take it super seriously, because what if you are able to turn $5,000 into $100,000? What if you are able to, like me over the last few months, turning $4,000 into $34,000? That's a pretty substantial return. So that's a lot higher than the S&P 500. That's extreme compared to the 10 or 15% returns you might get by investing in like an S&P 500 index fund. So that's why I take this stuff super seriously, even though most people just dismiss penny stock trading and investing. They just think, oh, whatever, you're buying penny stocks. That's stupid, right? And I understand why people would think that, because there are a lot of scams out there. There's a ton of scams. Most penny stocks are pretty much dilution scams, and that's what we talk about the balance sheet. We'll talk about that next. But dilution scams, I'm just going to skip one and come back to this because I want to bring this up real quick. Number 5, most penny stocks, what they do basically is they sell shares. So they're basically a share printing press. So for example, they'll have some press releases that might come out. The stock price, let's say, is at like 1 penny per share, and they have a shares outstanding of 100 million, or let's say they have the public float is 100 million, and so that's the number of shares available for people to buy and sell. Well, what they can do is they can, put out some press releases, and they can pump the stock price up, and they can, really get investors excited. All these people start pouring into the stock. And then what they can do is once the stock, let's say the stock's gone up from 1 cent all the way up to $1, well, now they can just dump a bunch of shares on the market. Let's say the prior shares outstanding were 100 million. Now let's say they're, 500 million, and now the stock has gone up from $1, but now it's down under a penny, right? Believe it or not, penny stocks can actually trade for fractions of a penny. So, let's just say the stock goes down to a zero bid. Let's say it was just a big pump and dump. This is actually what a lot of penny stock companies do. They load up, or they don't even load up on their shares actually. What they do is they just have, they issue as many shares as they want. So it's kind of like they have a share printing press, and they can just dump as many shares as they want on the market. And so that's really what you got to watch out for. This is a big one, dilution. And so you want to look for companies that don't have any dilution, ideally. And if they do have dilution, it's very, very minimal. And you also have to look at these other factors right here. What's the business model? How much revenue are they doing? What's that revenue growing at? Are they making a profit? If not, do you think they're going to make a profit in the future? And one way you can look at this from a profitability standpoint is the net loss decreasing? So are they having smaller and smaller net losses over time? Are their gross profits, are they increasing? So they're like I said, I don't want to say that every company is just a big dilution scam that aren't even selling products, don't even have revenues, but you really have to do your research into these things to make sure that you're finding companies that are the exception, because like I said, probably about 98% of companies on the over-the-counter markets, on the pink sheets, are total garbage. So the next thing, number 4, is the balance sheet. How much cash do they have? If they don't have a lot of cash, are they going to be able to get a lot of cash on the balance sheet in the future? Really have to look at these things. It can get kind of complicated, but if you're seeing revenues grow, if you're seeing the net profit come down, or the net loss come down, so they're losing less money. Maybe they're going to have positive shareholders equity in the future. Maybe they're going to have more cash on the balance sheet. Maybe they only have like $100,000 in cash, but the company's doing $40 million in revenue. So like an example, once again, is Alpine 4 Technologies. I've seen their balance sheet improve over time because they've been able to grow those revenues, and they're starting to really get the business in a serious position, and they've raised actually some money. Now they have done that through dilution, but the dilution has been minimal. So they've probably diluted about 25 million shares. Their share structure was 100 million before, but then their share structure now is like 125 million. So that's just an example. They probably sold about 25 million shares on the market, but their share structure isn't bloated, right? So they haven't diluted like 1 billion shares, and then they're going to reverse split the stock basically, which wipes out shareholders. They're serious about the business, and so that's really what you have to look for. You kind of have to look at all these factors in conjunction with everything. If you just pick one factor and you don't look at everything else, then you're really going to miss the big picture and you can end up making a mistake. So you really have to look at everything. And then once you've looked at all this, you really have to find a stock that's under the radar. Once again, I keep on going back to the Alp example. Alp was trading down here, 4 or 5 cents per share. It actually came down from about 44 cents in 2019. That was the peak, and people were selling off the stock like crazy. They were taking profits, or if they got in near the top, they were dumping their position because they didn't want to take a loss. So what happened was the share price got ridiculously oversold, and that's when I started loading the stock up, right? So down here, for example, this was like 4 to 5 cents a share. Now this up here, you could probably call this like $1 per share. So now even though the stock's gone to $8 per share, that's the exception to the rule. Most penny stocks, they might have like a 500 to 1,000% parabolic move. So what you really have to do is buy down here. You have to buy under the radar companies that people have not heard of yet. People, that are basically what I'm trying to say. Once the hype has come into a stock, it's too late. So once the stock's gone up 2,000%, you can try to buy high and sell higher, but you're taking a much bigger risk. The best way to do it is to find these bottomed out charts. These charts down here, right down here, 4 to 5 cents a share. We're talking, let's say this is $1. That's huge upside, 2,000% right there on your money. So that's what you really have to look for, because once it gets above $1, who's to say it's going to go to $10 per share? Now, like I said, Alp was the exception, but that typically doesn't happen. Usually what I see with penny stocks is they go straight up and straight back down for the most part. So you always want to be loading up at the bottom of a chart, a long-term trend line where it's kind of looking like it's bottomed out. Then you have to look at all these different factors up here. What's the balance sheet look like? Are they making a profit? Are they growing revenues? Is the company diluting? Once again, the best companies are companies that don't dilute, but that's not the only factor you have to look at. You have to look at their financials, the business model. Combine all these factors, and then you find a company that's trading at a very, very low valuation, very, very low under the radar company that nobody's buying right now. Eventually that's going to change. Let's just take an example. Company, let's say, is doing $50 million in revenue a year. Company's making a $2 million net profit, and the balance sheet has $5 or $10 million in cash. There's not many companies like this. You really have to do your research. I found a couple companies. I made a couple videos on those companies. One of them is a Chinese company. It's risky, but you have to do your research. And this is one company that I found that I really like, and I think this company could go a lot higher. I made a video on it actually just a couple days ago. If you guys want to check that out, it's my most recent video on the channel. But combining all these factors, and then you find a stock that's way oversold. Maybe it's trading at a $10 million market cap, but they're doing $50 million in revenue. They're making a profit of $2 million. This type of stuff does happen. I have seen it happen personally. And so if you can find a stock like that, you can make huge returns. But, at the end of the day, guys, you really just have to treat it like any other stock market investment. Even though it's money you're willing to lose, right? We already covered that. You have to be willing to lose whatever money you put in, with the hopes that if you do your research, you look at the business, you understand everything, that you might be able to turn that, let's say $5,000 or $1,000 into $50,000, $100,000. But anyway, guys, that's it. Just wanted to give my thoughts on what to look for when you're trading penny stocks and how you can set yourself up potentially for the best returns. To recap, guys, look at these factors, find a stock that's way oversold like this, and you can probably buy low, sell high. Now, it might take several months, so that's why I don't day trade penny stocks. I try to find the best of the best companies, and I try to load up on those companies as cheaply as possible. And then once they go up 500, 1,000%, those types of returns are pretty astronomical. So I typically at least take some of my position off the table at that point to, make some profits and then, recoup my initial investment. So don't be the idiot that's buying up here, guys. That's all I have to say. Don't be the guy that's buying a penny stock after it's gone up 5,000%, because it's very risky. You can still make money, but it's a lot less risky buying down here on from a technical perspective, looking at the charts and everything, buying down here than buying way up here after the stock's already gone up a ton. If everybody's talking about a penny stock, it's probably a good sign that, you should probably avoid that penny stock. If nobody's talking about the penny stock, probably a good sign that, it might be a good opportunity. So that's my little piece of advice there. buy when nobody else is buying. As Warren Buffett says, be fearful when others are greedy, greedy when others are fearful, and don't fall for the hype, guys, because I've seen it time and time again. I've had this happen to myself. Hype is the worst thing that can happen to any penny stock trader. You get involved in this stock that's gone up so much already, and you're like, oh man, it's going to go up another 5,000%. And then, of course, a couple days after you buy the stock, it crashes. And the reason for that is because the guys who bought down here, they're selling their positions up here. So don't be the sucker who is buying at the very top and then you're selling once the stocks crash like 50%. Be the guy that's loading up down here and you're selling to the people who are buying up here. So anyway, guys, hope you enjoyed this video. Like I said, penny stocks are risky, but you can make a lot of money. So always keep that in mind and only risk what you can afford to lose. Until next time, guys, thanks so much for watching once again. If you guys do want to see more content like this, be sure to leave a comment down below. Let me know that you enjoyed this video. Hit that thumbs up button. Also, guys, I do have a Patreon you can sign up for where you can learn about the best penny stocks to invest in. We have a private Discord chat of about 70 members right now. They're all talking about, the best penny stocks and which penny stocks they're buying. We do a lot of research on there in the private Discord chat. So I'll leave that link in the description if you want to sign up for that. It's a great way to support the channel. But anyway, guys, until next time, thanks so much once again for watching, and I'll see you in the next video. Take care.